review. And you guys already know whose tweets I'm about to review again. It is my buddy, Yvan from Trading Composure. I love this guy. All he does is post gems of wisdom on Twitter all day. It's just tweet, 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 gem, gem, gem. You know, I read this stuff and I'll just be thinking, this is gold, Jerry, gold. But let's just jump into it. When you spot a trading opportunity and spend too much time overthinking it, often the window is already closed. And it's the chasing that ensues that gets you into trouble. Hesitation in trading, it's a tough thing. Some people pull the trigger too often and other people don't pull the trigger enough. I'm the latter. When I was a discretionary trader, I was always scared. It's that Indian nature in me, don't want to lose anything. And the way to not lose anything is put nothing on the line, right? It's really not the way to think about most things, but that immigrant culture, it gets you. So if someone has a tough time pulling the trigger on a trade, if they're overthinking it, really the trick is to already have a plan in place beforehand. Because all that thinking you're doing that's turning into overthinking, that should all be done already. When you're actually in the moment, when you're actually making the trade, all you should be focused on is execution. Not whether the trade is going to work out or not, whether your thesis is correct. All that should already be done. You got to separate the thinking from the execution. So in my system, all the backtesting was done beforehand. The strategy has been looked at, it's been analyzed. I know the cycle, you know, all the good stuff that comes along with a backtested system. So again, I'm just executing. So as Yvan says, by the time you do all that overthinking, the window becomes closed. And then usually as you're seeing that window closing, that's when you try to jump in. And by that point, you're just chasing. And you don't want to be chasing, right? If you miss the train or the boat or the taxi or the rickshaw, just let it go. You gotta wait for the next trade to come. But I know that FOMO kicks in, and that FOMO is what makes you want to chase whatever that opportunity is, because you don't want to miss out. Which, by the way, I have this FOMO trading guide that will help you control that emotion. It gives you the tips and tricks and steps that I use to get myself out of that mentality. Make sure I never chase. If you want that, just click the link that I'm going to put in this video up above or down below in the description and comments. Go to that page, type in your email, and I'll send it over to you for free. It's great. It helps a lot. I still use it today. Next tweet. There are two ways to approach your inner life. You can fight what's difficult and uncomfortable, push it away or ignore it, or you can try to understand it, accept it, and work with it skillfully. Those two approaches will yield completely different outcomes. Now, unfortunately, Yvan did not give us the answer about which outcome is better. I'm not sure, but I think this is the better path to choose. And when I apply this to trading, it makes me think about choosing the right strategy that's right for you. And this isn't always the easiest thing. So for example, I'm a momentum trader. Now, it is not cool to say you're a momentum trader. You get laughed out of the room. No one respects that. And that's why I always, for years, felt the pull to go analyze fundamentals, like a value investor, you know, because everyone respects a Buffett or someone trying to do what Buffett was trying to do. It's prestigious, you know, sitting there with your 10Ks and whatnot. Now, I never like doing that. I like analyzing business models, like what a business is doing, right? But I don't like combing through the numbers, trying to analyze if there's a discrepancy in their balance sheet that the market might find out about and, you know, getting real forensic with it, studying the same company for months at a time. I wasn't into it. I like riding trends. That's just, you know, what I gravitate towards. So for me, I know it sounds stupid, but it took a while to accept that, kind of separate what I wanted to do from what people around me thought was the more prestigious thing to do. You know, I was trying to get away from that outside influence. And that's kind of what you got to do when you pick a strategy, or really it's what you got to do for anything in life. You got to do what works for you with no regard to what the people around you think, their judgment. And I am so much happier with my momentum system, that NASDAQ All-Star system that I always talk about. It's all systematized, it's getting in the hottest stocks with the best trends. It just matches with what I want to do. By the way, if you don't know what I'm talking about, I made a video explaining how I trade with this system. I'll put a link to that video right here. But like Yvan says, don't fight what's difficult or uncomfortable when you're digging deep. Understand it, accept it, and work with it skillfully. Don't fight your nature, just work with it, and that's how you're going to be successful in the market and life. Next tweet. When backtesting your strategy, you're always doing some sort of curve fitting to fit certain assumptions, expectations, or beliefs. The market is an ideal place for cherry picking, confirmation bias, and many other logical fallacies and biases. Hence, backtesting shouldn't be thought of as a process that provides certainty of an outcome. If anything, it should be used to demonstrate proof of concept. You're showing to yourself that your trading system has some basic common sense behind it. And this is important because if you've been following me for a while, you know I talk about my trading system and the backtesting backtesting that we did and how that helps. Well, I'm always kind of afraid that I'm overselling the concept of backtesting and what its real use is, because backtesting does not guarantee what your system is about to do in the future. Like Yvan said, it can't provide certainty of an outcome. What it's doing is just showing you that your strategy is viable. So Momentum, like the strategy that I use, they have tested data going back to 1929. That was AQR that did that. And they've seen that it's worked. Momentum is kind of a universal law, right? You see momentum in a lot of different things, not just the stock market. Like when a basketball team keeps winning, that's a form of momentum. So when you do that extensive a backtest, you know a strategy is robust. But there is also assumption in there, because that backtest, even though it goes so far back, that is on US data, right? The US stock market. And whenever you're trading US stocks with a bullish strategy, you're kind of betting and you're making the assumption that the US is going to keep going up and up over the long term. Like they say, Warren Buffett's investing strategy is just a macro bet on the US, which is kind of true, right? You're betting on US ingenuity. Where if you use the same momentum strategy in Japan with what's happened with their market over the last few decades, it's died. Their market has been terrible, right? Maybe momentum would not be working as well. If the whole market is just going down or sideways, of course, you're not going to pick the few stocks that are going to be going up. That's very difficult to do, because the overall trend of the market affects each individual stock way more than what the individual stock can do by itself. So any strategy you have, it's not going to be 100% bulletproof, because there's always risk in the market, right? But that risk, you got to accept it and then do your best to build a strategy that is going to work through multiple types of cycles and work over the long term. And that system that I use takes that into consideration. Nothing is guaranteed. Next tweet: your most urgent goal if you're a new trader is to have a plan and to minimize trading errors. Now this tweet made me think about tennis, because in tennis, when you're not that good of a player, winning comes down to making the least amount of unforced errors. Basically, you just want to hit the ball back over the net, and you want to hit it back so many times that the other guy screws up before you do. And that's what tennis is when both players are not that good. You know, when you're Federer and Djokovic, though, that's a different story. They're hitting winners. They got that consistency down. I mean, there's still unforced errors, but it's kind of a different game. And Yvan kind of explains the same thing here for a new trader, because one of your biggest goals is to minimize those trading errors. And most of those errors come down in the execution, assuming you already have a trading plan. So one of the first steps is to be able to execute that trading plan day in and day out. And that's why Yvan, and then me too, we talk so much about psychology, because the thing that's going to screw you up is that psychology. If you're getting scared, if you're getting anxious, if you're feeling FOMO, any of those things, those are going to screw up with your execution and cause an unforced error. Like we were talking about before, hesitating to get in a trade. That's an unforced error. So really, one of your first objectives as a new trader, focus on that execution. Now that's all the tweets for today. We will come back to Yvan's feed soon and do this all again. If you want to see that, make sure you subscribe to this channel and hit that notification bell so you get an email notification when we do this again. But we're also publishing videos every single day of the week, 7 days, 7 videos just for you every day at 7 a.m. Eastern. We have so much fun. Just come and hang out with us. Make a comment, smash a like, smash a comment, make a like. Do what you do, but subscribe and come hang out. I will see you in the next video. Stay fallible out there. Bye.